IAS 36, or International Accounting Standard 36, is focused on impairment of assets. It provides guidelines on how companies should assess and account for impairment of assets in their financial statements. Here are some key features of IAS 36. 1. Scope. IAS 36 applies to all assets except for assets that are covered by other specific standards, example, inventories, deferred tax assets, assets arising from employee benefits. 2. Impairment testing. The standard requires entities to test their assets for impairment when there is an indication that an asset's carrying amount may exceed its recoverable amount. This is typically done annually and whenever there are indications of impairment. 3. Recoverable amount. Recoverable amount is the higher of an asset's fair value less costs to sell and its value in use. Fair value less costs to sell is the amount obtainable from selling an asset in an arm's length transaction, less the costs of disposal. Value in use is the present value of estimated future cash flows from the asset's use and eventual disposal. 4. Identifying impairment. IAS 36 outlines indicators of potential impairment, such as significant changes in market conditions, technological obsolescence, or a decline in the asset's performance. 5. Impairment loss. If the carrying amount of an asset exceeds its recoverable amount, the asset is considered impaired. The impairment loss is the difference between the carrying amount and the recoverable amount. 6. Allocation of impairment loss. The impairment loss is allocated first to reduce the carrying amount of the asset to its recoverable amount, and then to other assets on a pro rata basis, typically excluding goodwill. 7. Reversal of impairment loss. An impairment loss can be reversed if there has been a change in the circumstances that caused the impairment. However, the reversal is limited to the amount that would have been recognized if no impairment loss had been recognized in prior periods. IAS 36 mandates extensive disclosures in the financial statements, including the assumptions used in determining recoverable amounts, the amount of impairment losses recognized or reversed, and details about impairment testing for cash-generating units containing goodwill. These are some of the main features of IAS 36. Keep in mind that accounting standards may have evolved since my last update in September 2021, so it's always a good idea to refer to the latest accounting literature or consult with a professional accountant for the most